Good evening everyone, welcome to our daily news. Lucas would like to begin this episode with hot news around the world. In the first 2 months this year, China manufacturing index steel consumption was 104 points, increasing by 4% on the same month in 2023, but reducing by 6.3 compared to the same period in 2022. Among them, only the machinery manufacturing industry declined from this corresponding period a year ago, while manufacturing industry, automobile, home application, shipbuilding, power energy, facility, container, and railway facility on rail. Overall, the steel demand from manufacturing industry will be strong in 2024, but the construction industry might be quick. The figure including stainless steel consumption. During the last few weeks, China-Taiwan stainless steel price finally achieved the considerable pause, mainly caused by the release of end-user demand as well as support from fluctuating further price. However, since the high stock level remain and raw material costs keep rolling down, market participants still hold a prudent view. This is short-term. The price stainless steel may still fluctuate from time to time. American investment and financial multinational Goldman Sachs Group Indonesia expect commodity price to rise up by up to 15% in 2024. The estimated outlook is based, among other things, on the fact that the central bank in the United States and European Union are expected to cut interest rates this year. This would boost both industrial and consumer demand. Commodities such as crude oil, gold, which reached a record high, and copper only saw a positive trend in the first quarter at over 9,000 USD per ton. The announcement by USD Federal Reserve and European Central Bank to lower interest rate and international support measures by China and domestic economy and resolve this trend. The analysts for the Goldman Sachs see the greatest potential in metal in particular, especially copper and gold, as well as crude oil. The bank forecasts a return 20% in select sections such as energy, industrial metals such as nickel, zinc, and S&P GSCI Commodity Index for 2024. As the Philippines work to ramp up mining to meet global demand for metal resources to green energy transition, environmental groups are demanding strict limits to protect nature and indigenous land. The Philippines has the world's 4th largest copper reserves and the 5th biggest nickel deposit. It is rich in copper, on which have important uses in clean energy technology, from lithium-ion battery for electric vehicle (EVs) to solar panel. Mineral requirement for renewable energy technology must be quartered by 2040 to reach the global for Paris Agreement, and the World Bank estimates a 500% increase in demand of resin mineral. This is encouraging mineral-rich countries like the Philippines, where mining to relatively undeveloped and only account for 1% of gross domestic product (GDP) to push their production of the so-called recyclable mineral, but with nearly 2/3 of the Philippine mineral reversing lining on indigenous land. Environmental and right community are demanding new legislation to limit mining activity to mineral needed for the green energy resource. The Indonesian state-controlled miner Thompson Antam aims to launch the construction of 2 nickel processing facilities next year under its partnership with China Network Company leader CPL. The project are part of Antam deal with CPL to develop an ecosystem to reduce material used in battery for electric vehicle (EV), and part of Indonesia's bigger ambition to set up itself as production hub to EVs. On Thursday, Canadian company Philippine Mineral announced it approved for $300,000 Canadian grant from the Mineral Development Funds (MMDF) to support exploration activity at the South Thompson project. The project, whose name derived from its location, being 200 km south by the town of Thompson, covers more than 3,077 square kilometers of land. The license area from the southern exception for Manitoba, Thompson nickel base, as Canada, one of the world's leading nickel processing regions. In the USA, the Cleveland project designed to accelerate decarbonization have been selected for the funding up to $507 $65 million for US Department of Energy (DOE). The project entails considerable electrification for its melt sub-capacity and turning away from the US coke and coal in the favor of direct reduced iron (DER). And other iron units sometimes refer as a scrap alternative. Rather than increasing the use of recycled ferrous scrap, the Cleveland-based mining and steelmaking firm say one furnace modification avoids the US significant amount of prime scrap metal while allowing it to maintain the level of quality of steel produced, which would otherwise be defrayed with increased scrap uses. The Cleveland Clip is making the move despite of ownership of Detroit-based ferrous processing trade corporate, which is among the largest processor and distributor of prime ferrous scrap in the United States, representing approximately 15% of domestic manganese prime market. This is on the news today market, and we should keep you updated on how this developing impacts steel industry. Thank you and have a good day.